The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the day finally came. USDA grain stocks and acreage reports, coupled with the end of the month, the end of the quarter, and overall, when things settled up, not a great day. A lot of surprises, and most of the surprises leaned to the bearish side of the market trade. We're going to break it all down, though. We're going to debate things, and we're going to talk about it and see where these markets could go from here. Joining us for our roundtable discussion today, Kristi van Ahn-Kjeseth with Ahn Company, and DuWayne Bosse with Bolt Marketing. And DuWayne, Kristi, thanks for doing this. I know we did this same roundtable back in March. It was a lot of fun, so I said, well, let's get the band back together and talk about these reports again. So thank you both for joining us. Appreciate it.
Thank you.
Absolutely. Thanks for having us.
Well, I don't know where we start. I suppose Acreage. That's going to be the one that's probably debated the most, and so let's go with that. Corn acres higher than expected. Bean acres a bit lower than expected. Some caveats here that I know we'll talk about. DuWayne, I'll throw it to you first in terms of the acreage numbers. I'll pull those up on the screen. I mean, your initial reaction to those acreage numbers.
Sadly, for this one, I wasn't surprised. If we go back to last time we talked, I remember we were harping about the total principal crop acres being down so much in the March intentions. And I was just very nervous about this report being bearish for corn because we'd find acres. Did I trade it that way? No, I didn't. Of course, that would be smart. This is one time I was really hoping I was wrong about the report. But I mean, I understand people being frustrated with the flooded acres and things like that. But like I said, if they would back up and realize we were down on total principal crop acres this much, this isn't a huge surprise. Where I'm at, my office, Northeast South Dakota, the Dakotas are always kind of king for prevent plant, which we hate that, but we just are. There was areas of trouble, but it wasn't massive prevent plant. I'd say, fairly close to average is what I was calling it. And that would probably mean a little bit of an increase of some acres from the March intentions. And sure enough, it just ended up being corn this time, where soybeans and wheat were fairly unchanged, I thought.
Kristi, how about you? Your initial reaction to the acreage numbers?
Yeah, kind of that similar situation. I was feeling friendly corn for the last probably 2 or 3 weeks. Obviously, that's not the direction that corn has gone over the last 2 to 3 weeks, but I do feel like there's enough tidbits around the corn market to support it, but it's just everything seems to be trumping it, and everything seems to be bearish right now. And so we got this number. I talked a little bit about 2019, how in 2019, we had a very late, like you can't even compare this year to 2019, but USDA acknowledged that, took some acres out in the June WASDE, and then in the acreage report added a bunch of acres in and just completely shocked the market. And so I think, the hard thing here when you look at it, or I should say yield came down and then acres. I think the hard thing to think about right now is that these acre numbers are planted acres. There's a lot of talk about, what will happen to harvested acres. We also got harvested acres out of this report, but they fall very close to line where probably you should see on an increase. And so, I think moving forward, that's going to be the big thing to watch, is that you want to talk flooding and all of those issues. That's going to be more of a harvested acre problem than it is a planted acreage problem. And so that's probably the focus moving forward. Unfortunately for me, I have driven in some of the wettest areas over the last month. The last 2 weeks, I've been down in southern Minnesota 3 times, into northern Iowa, and I need to seriously stop traveling. Maybe I need to get on a plane and go out to like the eastern corn belt and give my mind a fresh perspective. But there are so many problems out there. So I do think that you're going to have that. But now corn's job here is to find a low. You got a very large acre number. You got it was above the range of expectation. So you know what? Corn's job is to find a low. And at this point, as much as you don't want it to happen, that's what it needs to do. So you can kind of dig yourself out of here. Hopefully on this kind of pullback on corn, we can drum up some demand. Demand has been very strong for corn. If you look at quarterly stocks, we'll get into that later, but the usage has been fantastic for corn. And so this is corn's moment to say, hey, we have a lot of corn on hand yet. Let's use this cheap price. Let's drum up demand. Let's get some used and then move forward.
I have one caveat here, or DuWayne, you got something to add to that?
I could add 100 things. I think I remember this is what happened last time too. I love what Kristi said, and I just jump in, start talking, and kick you off your own show from hosting. But
I'll allow it. I'll allow it.
All right. Well, no, that was great. Well, I had heard that Kristi was traveling around this area, and I wanted to get her perspective of that. But I know what she means. You get a horrible case of backyarditis if all you see is the worst spots. And Dakotas are that way. If you go in Southeast South Dakota, you see all this nasty stuff. But for me, I had to drive from North Dakota down to get there. And there's a lot of good crop in between. So, I think Kristi nailed it. What I liked is the corn's job right now, the corn market's job is to find a low. And I really hope and kind of think it was today. But now next week, the market direction is still greatly going to depend on the weather forecast. We're in a weather market season. And if Sunday night and Monday, there's still rain in the forecast for the 15-day forecast, well, then you're halfway through July, and that's not going to give it a reason to rally. I mean, we're probably going to find out commitment and trade report that the funds are horribly short, and this time of year they shouldn't be like that. But if we're going to have to see that hot, dry forecast for it to rally, we might go sideways from here, but we do need that caveat to rally yet. But in full disclosure, I got out of my December corn hedges today for my own farm, not for everybody. Again, that's not for everyone getting out of hedges, but I'm curious what Kristi thinks about that, if I was crazy. But I just felt like, man, I don't think there's a lot of downside risk for the next month, let me say.
Okay. Yeah, I'll build on that. We had rolled down hedges to a conservative position. So in a way, you still had some downside protection, but we were definitely with DuWayne that we were really pairing up for a neutral to friendly report. We took opportunities earlier to do marketing, which obviously DuWayne did because he has those hedges on. But yes, I mean, the general sentiment was that we were close to finding a bottom. And when we look at corn, I'm with DuWayne. I'm hoping that today was that day. We're going to close well off of the lows. And also, not only that, the next price point lower is really like 406 for December corn, in our opinion. And I'm looking at it and I'm saying, hey, right now we're 421 and a half. If we bleed 15 cents lower, is that, a big deal? And at this point, I would rather be more conservative and try and set ourselves up with a situation to sell into versus try and capture that 15 cents. And who's saying it can't go lower than 406? But that's kind of the target we've been watching for quite some time, is that level. And, I just think that there's enough tidbits. I also think when you talk about backyarditis, not only have it, the crops just don't look good around here. They're the corn is tiny. I mean, like, I can't remember corn being this tiny in so many fields. And so, when you drive, there's not a field that doesn't have a drowned out spot. And so I think those are all going to come into play. But we've been really cold around here. Like, I am heading to a softball tournament tomorrow, and the high is like 64 degrees, and it's like the weekend before 4th of July. So. It's those type of a thing that it's been cool, it's been drizzly, it's been cloudy. That all plays into that logic of looking at this crop and the general sentiment when you start to talk about producers. And they obviously are talking about how wet it is, but more and more I am hearing guys just say, we are very behind on growing degree units. I am very concerned about moving forward. And the threat of a frost freeze now, granted, we're getting way ahead of ourselves here, but that's what we're starting to talk about. And I think it's a very true topic to be touching on. Also, when you look at the corn market, not to keep rambling here, poor Jesse,
he's not going to get a chance to talk today.
But, I look at it, something that we've watched really closely is the spread from D's to July corn, and it traded around 31 cents today. But to be honest, if you're going to say we have this many acres around here, the interest rates are where they are, I'm surprised that spread isn't wider, 35 to 40 cents at this point, to be honest. It's really hovered around 23 to 27. We got this, kind of widen out of 3 cents today. But that's a spread I'm watching. I think the spreads will tell you a lot. And, the fact that spread got out to 32 and started to narrow back up, even with corn down the 14 cents, I was like, what is this telling us? And I think it's telling you that it's not ready to absolutely kill the market and hopefully not print that 3 in it quite yet.
I'll just keep going, Jesse. I think what happened to the markets the last 2 weeks, and you guys correct me if I'm wrong. I'll probably have to ramble to get this point out too. So I know I took the top end off my expected yield. I was one that was, trend line 181 and hey, maybe higher because I just felt like we were due for it. Okay, then Mother Nature happens, right? And the holes out there that Kristi's driven through, I've got clients up in Grand Forks saying the same thing, like, yeah, I got my corn planted late and it is short and yellow. And so, okay, so I'm down to like a 177. I think that's probably where the trade is at. I think the problem with the last 2 weeks, with all this rain we've gotten, you always have a range, right? Somebody's going to be at a 184 and somebody's at a 120 for a yield. That 120 guy, that low end range, has come up a long ways because of all the subsoil moisture we have out there. We're not going to have a 2012 right now, or it would have to just flip like that and be hot and dry to have something like that. So I think that's what the market's traded is. It's been raining at the end of June and a wet forecast into July 4th holiday. And the funds are just piling on the shorts. We'll find out next week or the week after if that was right or not, but I think that's what's driven the market down. Now, let me switch gears, plugging in the acres numbers we got today, and that yield I mentioned of like a 177, I'm sorry, I'm not a 171. God, don't get that out there. I end up with an ending stock for new crop at 2.12, which ironically is very close to the old crop ending stocks. And honestly, my soybean number is about the same too. So back to the price, how much further lower do we have to go if our stocks basically don't change year over year? To Kristi's point, we got strong demand. So I just continue to not see a whole lot of downside risk here. Now, I'll remind myself that Monday as I'm making margin calls on long positions. But I guess that's my point. I better just end it there and let Jesse actually talk.
I'm going to say, I want to jump in here with this caveat. Thank you for allowing me to talk on my own show for at least 30 seconds here. There was a note, I think it was at the top of page 6 of the Acreage report, and it was the special note about acres left to be planted. Yep. Any of this surprise you? I didn't catch this at first. A few people had to kind of point it out to me as I was looking through all the numbers and all the craziness. But did this surprise you? Does this feel normal to you? What are your thoughts on this special note in the Acreage report?
Yeah, I have a couple questions on it, right? I think the hard thing for me is I did notice it. I had leaned friendly into this report. So I was like, Kristi, put your blinders on. Stop trying to look for friendly information, like listen to the market. And so I did see it. And I think it's something we definitely need to talk about because what acres are actually going to get planted in corn after June 16th? And I think you can say that, majority of those corn acres left to be planted are not going to get planted. My only concern is going back to 2019, where they counted those planted acres with prevent plant accounting for corn, and that yes, those acres are not planted, but were intended for corn. And that ends up being in there. And I don't know if that's going to happen, but I feel like, inflation talks are not to be conspiracy theory, but inflation is the main concern of the current administration. And if we're going to talk about that, how much bullish information will we get to support these prices in a large perspective? Because that's a lot of acres. And if you took that off the schedule, that is a very tight carryout. So I'm trying to not read into it too much until maybe they move forward and kind of see that. But it does make, in my opinion, the July report a little bit more interesting. Typically, these acres are the acres that we stick with for quite some time. So it does make that July report just a little bit more interesting, in my opinion, that maybe this is a short-term acre number, but who knows?
DuWayne?
Yeah, I did see that as well. And, wanting to be bullish myself, I tried to get it in my head that that's really bullish. And Kristi's right. I mean, if you took half of those acres off, we're limit up, right? But then I started to think back to myself when I tried to be neutral. That's probably about normal acres left to be planted when the survey is going on, I guess, being conducted. I would have to do some research to find out if that is the truth or not. But up on my farm, where I feel like I'm the last one to get planted every single year, I feel like, yeah, there's a lot to be planted when you get to the 1st of June, which is, I despise it, but it's just the way we are. But to Kristi's point, then it makes the July S&D table, the report there, interesting. And that's why I wanted to kind of shift gears to it. Because I'm like, today we feel super bearish, right? Look at the way we closed. Look at a chart, makes me want to puke a little bit. But when I think we look forward, I think we're going to find out these numbers are not that bad. And I'm curious what you guys think. Where do harvested acres come in at for corn? Right now, they've got them, harvested acres are 8.1 million under planted acres, the exact same as last year. Doesn't that have to inch up a little bit?
Man, I think harvested acres, that's going to have to come back to all the flooding issues and whatnot. I mean, man, oh man, the pictures, the video that I've seen, and I know you guys have seen some of this firsthand in person, but we're talking a wide area of the Corn Belt that is underwater right now that unfortunately, I think a lot of the algo computers and whatnot, the way that the trade is now, they just read it as, rain makes grain. And that's what they're going off of until we actually realize and assess how much crop might be lost. So I think that, I guess my take on this is, acreage and harvested acres, what that could be right now is not friendly, but I think that tune is going to change we get later in the year. What do you guys think?
Yeah, I think so too. I've found myself this whole time somewhere between like a 1.8 and a 2.1 on a carryout level for corn. Like I felt pretty confident in that range that eventually that's where we would find ourselves. If we got down to the 1.8, I feel like the 1.8 could get us to close that gap on D's corn, just above 503. And that was kind of my target, is that if we could get back to where we did some recent marketing around this 485 to $5, if you were like out into the March and July timeframe, I felt like you could get back up to those levels, and a 2.1 would give you kind of a 450-ish low. And obviously we're 30 cents below that 450 at this point, but I did feel pretty confident in that range. So overall, when you talk about, when DuWayne said it's not all that different, it's not all that bearish, it's just that we have to chew through it. And I think you did have those last little people that were friendly. And honestly, I think that there was still quite a bit of corn that needed to puke out. And I think that we're seeing that come through, is that this is kind of that last little push that guys are like, I'm not holding this anymore, because before you know it, I need to be focusing on my new crop.
Yeah. Yep. I would say that is definitely the case. So, and I think too, before we get to the stocks numbers here, first notice day too for July, that might have even added into some of the extra volatility here. Just you get all this stacked up here. First notice day, USDA reports, end of the month, end of the quarter.
Yep.
That's a lot in these markets, right?
Yeah, I think so. I'll jump on that one because and the funny thing, same deal. It's like, why can't I learn from my mistakes before? December, we had that, right? Farmers selling into first notice day or rolling. That was their other option, right? And they rolled to March, and we got to March, options expired. We crash again as farmers sell, and then some rolled. The July contract is usually I'm giving up. And rightfully so. You shouldn't be hanging on or paying storage this long. So I think you're right. I think we had a lot of farmers selling on that front month contract into option expiration, even and beyond this week, of course. And look at that. That closed below $4 now, which it almost doesn't matter for us traders anymore. That's into delivery, but boy, that's ugly. Yeah, I think that had a lot of pressure on these markets, don't you, Kristi?
Yeah, I do. I just think in general, people are feeling like tired, defeated. I mean, you look at the bean market, and we like to talk about corn a lot, and we've spent 18 minutes talking about corn because corn is one of those ones that's very easy to talk about. But soybeans, kind of that same situation, man. What a bummer of a contract right now. I mean, soybeans have been extremely disappointing. Demand has been lackluster. We can't get any price movement. It seems like we can't get any information. And I feel like that's just the general sentiment around the market, is defeated, tired, like screw it all and like just let it be. And I think that's what you're seeing right now into these markets, and aided in that pressure as well.
Well, we are talking today with DuWayne Bosse from Bolt Marketing, Kristi Van Ahn-Kjeseth with Ahn Company for our USDA recap roundtable. We haven't talked stocks yet. Let's go over there. And I got the main stocks numbers up here on the video feed, but also too, I noticed the on-farm stocks were much higher than last year, which really didn't surprise me, because I think we all know a lot of folks have been hanging on to grain and not selling. So, I mean, in terms of the stocks numbers, what were your big takeaways? I know corn, beans, wheat, all higher than expectations here on this report.
Go ahead, Kristi. You can take this one first. I'm sure I'll jump in afterwards and have something to say anyway.
Yeah. Not to act like corn's my favorite child, but corn kind of is my favorite child. So we'll talk about that for now. But I think the biggest thing when you look at it is that our usage has been phenomenal in corn. It's been great, but it's still not good enough. It's the best usage we've had for this quarter, and you're still not good enough because we have so much supply on hand. And so that is the battle that we're having here, is just how far a yield and an acreage number can outpace demand. And so you're going to be chewing through that for quite a while. And I know that the common theme that I have heard on social media or read on social media lately is that, look at these ethanol plants bidding up, and can you believe what they're doing? I'm not really seeing that in my neck of the woods, to be honest. I'm not really seeing too much of a push. So I think it's in some select areas, to be honest. But I still think there's plenty of corn around. And that's just telling you, once again, how much corn we have on. Same situation for soybeans. I mean, you're looking at that number of 970 million bushel. That is actually, I was looking at it, one of those higher numbers that we've had in quite some time. You have to go back into that trade war era before we really had more beans on hand at this time. For example, like 2020, we had 1.4. So we did have quite a bit more during that trade war era. But other than that, usually our stocks should be somewhere in the upper 6s to lower 8s. So we're really having that. And it's just, once again, that burdensome story that we just can't get anything going. And I was really hoping that we could possibly see a friendly wheat stocks number, because wheat needs something to kind of give it a reason to try and round out a bottom here, consistently been making some new contract lows in Minneapolis wheat. We need something. And I think wheat is the key here. Wheat so many times can pull markets out of a funk. And we just didn't get any sort of good numbers out of this grain stocks report. Not that they were like scary bearish by any means, but nothing to kind of light that fire to help this market out.
DuWayne, your thoughts?
Yeah, the same thing. Corn's the fun one to talk about here. Well, not fun, but it had the biggest change, right? 117 million bushels above the trade estimate. And that stings probably just as much as the acreage number, really, because that's just added bushels we didn't think we had. The acres, we have a lot of time to adjust the yield and new crop supplies. But yeah, just adding more bushels is tough. So yeah, that stinks. One that I noticed in the soybean one, though, and I thought this was very interesting, is that on-farm stocks out of those soybean supplies that we have left are up 44% year over year.
Yep.
USDA is actually, they will admit the on-farm stocks is the hardest, most difficult estimate for them to come up with, which also means that they could be off the most. I don't have any soybeans left. I don't talk to a lot of producers that do have soybeans left. I talk to a lot of end users that are struggling to find soybeans. That might be backyarditis. Maybe that's just my area, but I little surprised to see the on-farm stocks be that high for soybeans, and kind of wonder if that couldn't get adjusted moving forward. Now, I do also know farmers are stubborn and we're strong holders and the price sucks. So if they don't need the cash, they just hang on longer. So they might not be wrong, but I was curious what you guys thought of that.
Yeah, it's always nice to hear a farmer call himself stubborn, so I don't feel so bad if I say that.
Very stubborn.
I guess if anything, the corn one doesn't surprise me, depending on how accurate it is. The soybean one, still not surprised, but I would tend to maybe agree with you, DuWayne. I think that one's a little more up for debate from the things I've heard as well. I guess I think about all of this, and let's put some thoughts and perspective on this here as we kind of wrap up the show today. There's obviously a vocal segment out there in the industry too that will say, why are we trading these numbers? It's just a bunch of numbers. This is not what's really happening. So there's that vocal part out there. And then you got, all the computer algorithms that trade these numbers nowadays and things like that. And, the sentiment of no matter what, rain makes grain kind of thing. And obviously prices, depressed, near new lows, not really a fun environment to market in. So put some perspective on this. How do we move forward from here in terms of our risk management? Whoever wants to take that one first.
Well, gosh, you
Go
just
ahead.
painted such a pretty picture, Jesse. Like, wow.
I was going to point out that I know everyone probably saw me take a sip. It's actually not booze. It's
Oh.
carbonated water. But
We can
the way you put that,
understand.
Jesse, I might reach a little further across my desk and
I
just open it
guess
up
I
right
should.
now.
I tried to do that as best as I can, but I think we all know that. I mean,
Yeah.
let's be real. I mean, there's some prices out there that a lot of folks don't love right now, but there are ways to manage this if we want to flip this on its head. So, I mean, talk about that a little bit.
Well, I can go first if Kristi doesn't mind, because I think I kind of showed my hand right away in this interview that I exited my December corn hedges here. Didn't quite get out of my November bean hedges. I just needed a few more cents. I wanted to see that tick below 11 to exit. So as a producer, I'm willing to take the price risk back on at this level. Now I know everyone else is probably out there going, I wish I was more sold. And of course, everyone wishes they were 100% sold at the highs, but I was about 40% hedged on corn. And at this level, I'll exit that, have all the upside potential because of what Kristi was pointing out. You talked to her ending stock from a 1.8 to, I think, what were you, 2.1 at the highest?
Yeah.
And that's the same as year over year. So can prices go lower? Absolutely. Would that sting for me? Sure. But I'm willing to just kind of be unhedged here for a while and see, this crop isn't in the bin yet, especially all the corn I planted that's this tall now. It's got a long way to go. I get it. We have a lot of moisture, subsoil moisture out there. But if we find out later today in the commitment trades report that funds are close to record short corn or something, that's going to make me even more friendly because the records are meant to be broken. But if something changes, we could rally back quite a bit to those points Kristi talked about. $5 is still not out of range, and then we'll be able to sell it again. But to my point earlier, we don't have a 2012 drought here, and drought is still kind of the thing that can really decrease the yield. So on rallies, it will meant to be sold, I think, and I will get sold again. But right now, I'm friendly. I know all the bearish stuff Jesse brought up there was horrible, but maybe we're at the lows.
Yeah, I'll
Kristi?
touch on that. Yeah, I'll touch on that as well. And I'm very similar, when you look at it, is that each person's going to have a different perspective on this, right? So obviously we've done our marketing on some bushels. So it's much easier for us to say, hey, we feel comfortable stepping to the sideline, just like DuWayne is saying, we can step to the sideline. Now, people that haven't done any marketing, that's a much different situation, right? You're in a different predicament. The conversations that I've had with some elevator managers lately has been that they have a fraction of what is typically sold at this point for new crop. And I think that's probably one thing to focus on, is that maybe producers have done a good job on rallies here on their old crop, but not so much on new crop. And so I think that's one thing to note, is that what DuWayne said, rallies are meant to be sold. I think that's what we need to keep in mind, is that in general, I think that the U.S. farmer is very behind in new crop marketing, and I don't think they have what they need sold on the books. And so I'm very concerned the closer we get to harvest, any rally is going to be sold by a producer for those overrun bushels that have to go out the door and get into the elevator right after harvest. And so that's a concern of mine. Like I said, I can lean friendly, but when I lean friendly, it's not like I'm this huge, super bullish person. It's that I think that you could put some on. And what does that look like? That looks like, upper end of the range for me is 480 to 503 on corn. And I know that's disappointing. People didn't like it then. Hopefully they like it if we can get back there now to do some marketing. But realistically, without some major problems or hiccups, I think that's what we're at now. Beans, we need to see China step in and buy our beans. Like, this is a very, very dire situation. We have done a good job since the trade war era of not completely leaning on China as a whole. We've done such a good job on crush margins. You look at crush where it's at and how much usage it is. That is such a fantastic thing, but we still are not out of the woods yet for relying on China. So we do need to see some of those purchases happen. I'm hoping that we can get past 4th of July weekend and start to see some of those made just at the current level that we're at. One also thing that I've kind of noticed is that it's really dry in parts of China right now. So if you could come in here and see China partake in our corn, I think that would be a huge benefit as well. But once again, all of those little tidbits is going to lead us to the same situation that Ahn Company as a whole is going to be sellers on rallies moving forward just because of it. And, there's situations you could do if you wanted to get a call in place. And to be honest, corn calls are dirt cheap right now, like absolutely cheap. So there are those, but overall, if you're like, what marketing plan should I have right now? I don't want to say you're SOL, but at this point, I'm not crazy about it. And I know that in 3 weeks to a month from now, I'm going to start getting conversations from producers being like, well, I cleaned out my bins. I have all these bushels sitting in the elevator. I need to price it within 15 days. What should I do? And you're like, well, like, you know, so don't put yourself in that predicament. If you have a lot of bushels, old crop bushels, I know the price stinks. It's not where I want to sell corn. I wouldn't pull the trigger today, but if we get some rally power out of here on those bushels that have to be out by harvest, I'd start making some incremental sales. And if you so desire to have something on, you could look at that, but I don't think that's my main concern. I've moved on to focusing on new crop at this point.
Well,
when farmers get to that point and say, what do I do now? And you know how you're frustrated at the end, you can just tell them, just hop in your DeLorean and hit 88 miles an hour, because that's the only way we're going to get back to where you want to be.
Right.
Well, I will say this has been fun again, even if I had to assume the role of negative Nelly Bear in this roundtable today. I guess I will take one for the team there. And you know what? Hey, we didn't debate our golf games like the presidential debate either. So we got that going for us, because that wouldn't be a good debate between the three of us.
There's no debate. I suck. Yeah.
No one wants to see me. I do take a girls' golf trip, but to be honest, it's called a girls' golf trip. The amount of golfing in that is very limited. So you're not going to see me doing that, but it's an excuse nonetheless to get out.
There you go.
Well, I know folks can find DuWayne at boltmarketingllc.com. They can find Kristi at vanonandco.com. And DuWayne, Kristi, appreciate both of you joining us for the roundtable here as we recap the June reports. Thanks so much, and we'll talk to you again soon.
Yeah, thank you.
Yeah, thank you both.
And that's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great weekend.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.